All right, welcome back to Burn Rate and Beyond. We are on episode 7 today. Jeff, how you doing?
Doing well, thank you. How about you?
Right on, yeah. I'm good. I'm good. It's Friday. It's a good day to talk about accounting. 'Cause, hey,
It's like everybody knows that Fridays are accounting talk.
death and taxes just doesn't ever stop. So today we're actually going to talk about taxes. That is the topic of the day. It is effective tax planning and compliance and how that relates to cash flow and burn rate and all this other stuff we usually talk about. So since I spend a little bit more time in the tax world than Jeff, we're going to flip the script a little bit here today, and Jeff's going to ask me the questions and see what kind of good stuff I can come up with. So I will just hand over the mic and say, Mike, Mr. Jeff, Mr. Mazza, let's hear what you have to say.
Yeah, no, thank you. And I think this is it's great to kind of flip the switch, and I'm looking forward to talking more about tax and kind of get your thoughts on a bunch of things. But yeah, I think for the most part, I mean, you look at any businesses, particularly small, medium-sized businesses, and the it's cash is always a lot of times very tight, and it's a lot of times there's if you do turn a profit, there's taxes involved and implications there, so it's always a hot topic too. But I guess to like start off, just understanding, there's so many different let's say tax obligations and deductions and all that. But are there, I guess, for people to be a little aware of, some common, what are the tax obligations that, maybe small and medium-sized businesses that usually they overlook?
Yeah, well, I guess the obligations there's obligations at various levels, and depending on the activity that you have. So, number one, obviously, the most everyone knows about is the IRS, the federal level, and most states have a filing for income tax purposes as well. But in addition, if you have employees, you have payroll taxes that can also be they're due at the federal and state, and sometimes the local level. And the final one would be sales tax, which is generally collected at the state or city or county level as well. So those are the three main ones that revolve like a high percentage of ongoing compliance. There are some other ones that kind of sneak up on people um, like city taxes, city payroll taxes, or if you have to get a business license in the city that you or where your business is located, and then there's a annual property tax filing. There's these other little in irregularities, if you want to call them that depend on the actual locality where the business is located. So it's not that there's I guess that's kind of the benefit of working with a local professional or someone who's very versed in the field can help you guide through all these hoops that you have to jump through to make sure you're staying in compliance.
That's awesome, and those are, I think, some big ones that you talked about, which is great, especially the payroll tax. And I think leveraging, if you're small, leveraging the outsourced accounting folks that deals with all the payroll taxes probably is great. But
Yeah, I would say that like payroll taxes is like the number one source of funding for the federal government, and it is dollar. Like, regardless if you're profitable or not, you have payroll tax. If you have employees, you have payroll taxes, and so everybody has to. Most I shouldn't say everybody. Most small businesses have to deal with one shape or form. And the other thing that maybe most business owners don't realize is payroll taxes are actually um, it's actually like a trust, considered like a trust fund, in the sense that the business owner, is collecting the payroll taxes on behalf of the employee and paying them to the government. So if the business, so it's actually the business owner, their obligation is to handle those funds in good faith. So if they don't handle them in good faith and they were to go bankrupt or go out of business, those taxes don't go away. The owner or the responsible person of the business continues to have actually the responsibility after bankruptcy quite often, and can be a really big problem. So the that is a payroll taxes is one that it's definitely worth outsourcing and automating if possible to to avoid any bad outcomes.
that's awesome. And I've you kind of heard the saying, but that's interesting. A good analogy how to put that right in terms of collection there. But I guess even with the tax obligations, right? I mean, sometimes there's laws that change that a lot of small and medium-sized businesses, as well as large, that might not know what they are. But I guess what are some maybe best ways to kind of stay informed, I guess, of some of these laws?
Yeah, I mean, there's definitely, I guess there's a couple different resources. Aside from your accountant, what do you call it? You can connect with the IRS, or your state income tax, like the revenue agency, and they have announcements, and often they have what do you want to call it, like a newsletter that helps keep people informed of general things and particular things to industries that have more complex compliance. So that's definitely I would definitely recommend trying to find those resources. So
That's great. Because they are changing, and you don't want to miss any new laws. So I guess even if you do miss one, I mean, what's kind of like the consequences there?
So yeah, like if you forget to file a tax
Or
return,
something, yeah, any sort of
yeah,
compliance, yeah.
yeah. I mean that's the so ignorance, of course, is not unfortunately is not a get out of jail free card. Like the government says, well, you say, well, I didn't know. They're like, well, sorry, you should have known. It was your responsibility to know.
It's
So
like you haven't
I've al-
filed in 5 years. Like you did not
yeah,
know?
yeah, no, that doesn't. Yeah, that's not going to fly. But there's a couple things. Generally, the issue is to just get in compliance as soon as possible. Um, because there's two kinds of penalties. There's a penalty for not filing and a penalty for not paying. So the sooner even if you can't pay the tax that's due, filing is really important, just so that you can kind of can make at least have one of the types of penalties stop accumulating as the days and weeks and months go by. In the meantime, I think that the thing that I think I guess there's a couple of nuances. Like for example, LLCs, the legal entity as an LLC is not required to file a tax return. So there's some advantages to forming an LLC. You have like a great business idea or name, or you have a group of people you want to do business with, and you form the business. Now you don't, depending on the state you're in, the state laws are inconsistent. But at the federal level, there's no requirement for filing the LLC income tax unless you've chosen to have it be taxed as a corporation.
Yeah.
If it's taxed as a partnership or a disregarded entity, there's no requirement to file a tax return.
Yeah.
On the contrary, corporations are required to file tax returns from the very beginning, independent if they have activity or not. So anything that's dot Inc. or whatever, Acme Inc. or an LLC that you've chosen to have be taxed as a corporation, you definitely need to file every year. And the penalties can grow quite quickly. I think for an S-Corp and a partnership, it's like $150 per month per partner for filing late. So those can get kind of steep pretty quick depending on what's going on. So definitely want to stay in compliance. So
Oh, that's great. A good info there. And even, I kind of looked at it like those are the tax obligations, but then I feel like everyone is always, all business owners want to keep more money in their pocket. And then I think there's deductions and credits that can kind of play into that. And I guess even just like, high level, just the difference, like what's a deduction, what's a credit, and how can that help a business owner?
yeah, so deductions and credits are pretty straightforward to differentiate. Just the simple math is credits. Credits are better than deductions. Credits are dollar for dollar reduction for your taxes. Deductions just reduce your taxable income. Um, so if you made $1,000 and you had $700 in deductions, your taxable income would be $300. And if you were to qualify for a credit, for example, of $300, then you'd have $300 in taxable income. The credit would reduce the. Actually, let me wind back here. If you had, let's go back to our example. You have $1,000 in gross revenue and $700 in deductions. So you have $300 in taxable income. If you're, let's just say, for easy math, a 10% tax bracket, then 10% of 300 would be $30, right?
Yep.
So you would owe $30 in tax. So if you had a tax credit of $30, then you would owe no tax. If you had a tax credit of, $10, you'd owe $20, right? So the tax credit reduces tax dollar for dollar the actual tax that you owe. So anyway, the you asked about the ones that are most they're often missed or underutilized.
Yep.
And I would say if you're working with a reputable tax preparer, most people don't. There's something you need to. The important thing is good accounting and good bookkeeping. If things are properly organized, reconciled, and that and you've set up a good system to capture the information, like I guess one thing that happens to business owners is like they mix their business and their personal, and so the classic one is like, oh, I bought something on Amazon. Well, cool. What'd you buy on Amazon? Did you buy like a Game Boy for your kid, or did you buy paper for the office printer? Right? Because you can buy anything on Amazon. So without the receipt and understanding what's going on, you might miss them or misclass. You might over or understate your deductions, which are both a problem. So the best advice there would just to be to have a good system where you differentiate between. It's easy to differentiate between business and personal expenses, and you have a good accounting system to capture all. So if it's captured, then you'll be able to get the deductions that are appropriate. But I'd say probably the biggest there's probably a bunch of credits that people miss out on. So the ones that I have in mind are like there's the R&D tax credit, which is a really big one. Um, and actually can be beneficial if you're profitable or not profitable. There's also a tax credit for setting up a 401k. There's a tax credit for giving maternity leave. There's a tax credit for setting up health insurance. There's all these like little things that help that can just help. And I feel like those are things that if there's not a fluid conversation with your tax preparer, you might miss them and not be able to take advantage of them.
That's great. That's such good information there. Because even with small businesses, medium-sized businesses, there's different, entity structures, right? There's proprietors, S-Corps, partnerships, what have you, LLCs. But is there any sort of difference, I guess you could say, like in how deductions may apply to each of those structures?
I would say, as the accountant, the favorite accountant answer is it depends. So the the general deductions are not different. Anything that the business spends in the normal course of business can be deducted as a general rule. There are some nuances of how certain types of deductions are implemented in a sole proprietor versus an S corp versus a partnership versus a C corp, such as like how your home office or how you use a company car, um, retirement planning. There's nuances to how they need to be handled. It's not to say that you can take it in one, but you can't take it in the other. You might be able to maximize it depending on your more in one structure versus another structure, depending on the other facts and circumstances, like if you have other employees or how much money you're making, and a bunch of different things. So there's not necessarily there's optimization, I guess, within the options that can be done.
Got it. Yeah, and I figured that there was a lot of, I won't say nuances, but variables for each, maybe some structure and just different, areas to look at during that process. But of a tax, kind of process, I feel like there's a lot of business owners that, they're in the grind, they're in the day to day, and then the end of the year, they call up their accountants, say, all right, here's my box of receipts, I guess, for taxes. But when we talk about like strategic planning, right? It's not so much let's just focus at the end of the year, or let's say January after the year is over, but strategic tax planning throughout the year, right? And I guess in your mind, how often should someone really be looking and planning? Is that like a yearly activity, quarterly, monthly, and what does that kind of look like?
Yeah, I guess there's a couple things. It depends a little bit on the complexity of your business and the stability of your business, because there's different phases. There's the startup where you're not making any money at all. There's the growth phase where things change significantly, often month to month, and then there's more of a stability phase where the business is more mature and essentially if it's growing, it's not growing exponentially. So depending on what phase you're at and the complexity of your business, kind of determine how often you actually need to talk and look at this and consider it. So, in the growth phase, I'd say it makes sense to look at it at least twice a year, if not quarterly. In the stability phase, that can go from once a year to monthly, kind of depending on how big and complex things are. So um, I guess the reason it's important and what it looks like is basically you make a projection. You make a series of assumptions saying, okay, well, given the information we have, what is the rest of the year going to look like, and how much would you owe? And the reason why there's an advantage of looking at it multiple times a year is that there's certain things you can do. There's a limited number of things you can do between December 31st when the year ends and April 15th when the taxes are due, the tax returns due, right? There's a limited number of things. There's a very few levers you can pull. But if you talk about it, at the beginning of the fourth quarter, or during the year of the current year, then you can adjust spending, adjust timing of things, accelerate certain things, delay other things. So there's more options. That's the advantage of looking at it in advance. And then also, of course, the whole like surprise, like, oh, you had a good year. Great. Now you owe lots and lots of money.
Yeah,
Hope you have
congrats.
it. um,
That's good. And it's such an important piece that I feel like a lot of business owners they're so busy that sometimes they forget to look at that. Even before we're talking about deductions and different types of entity structures, right? But
well,
I
let
know
me
that
let me interject there because there's also one the simplest thing to do regardless is to take a small percentage of your gross revenue and then just put that away. Transfer it to a savings account, put it under the mattress, whatever, someplace where it's a little bit out of sight, out of mind, and you're putting away, 5 to 20%, depending on how profitable the business is and what tax bracket you're in, of your gross revenue, putting that away, and then just saying, okay, we're going to save that for later, because that's and to save that for the always present third party, the government, and anyway, so that's a simple strategy. You don't even need to have any in-depth knowledge. You just need to, it's like a principle anybody can implement tomorrow.
that's such valuable information, especially as like you mentioned, hey, you had a great year, but by the way, here's your tax bill, and it's like deer in headlights sometimes, right? Where wasn't aware of that, but if you did save some on that certain percentage, whatever, like you said, some of those variables and how profitable that business is, you're well prepared for that bill.
Yeah.
But even with that, right? I mean, we're talking about different structures, right? I mean, I know there's some LLCs that they're plugging along, but at some point it might make sense to move to like an S-Corp for these tax advantages. And I guess like when does like a business owner or business want to change their structure in order to maximize any sort of tax efficiencies?
Yeah. That's an interesting question. And I guess the way I think about it is when something big changes, and the big can be defined in a couple of different ways. So big in the sense of like the ownership structure is going to change. Like you want to bring on outside investors. Okay, well maybe the current entity structure you have isn't the best for that. Your business another something big could be that you're going from being, if you're in a growth phase, you go from being marginally profitable to highly profitable. Okay,
Yep.
well at that point, like lots of business, like I don't know, there's all those statistics out there that like 90% of businesses fail in the first year. Like I don't, so there's this really high percentage of businesses that never really get off the ground, and so planning for shoot a moonshot business tax wise in the beginning isn't always the most efficient thing to do. The
Yep.
efficient thing to do is to build a profitable business, and once it's profitable, most of the time there's options to fix or make it more tax efficient as time goes on. So I think it's more of a function of, okay, cool, we have something that's working. Now let's see what options we have to improve the efficiency. And lots of times it's like there's rarely is there like, oh my God, this thing is going to just make my taxes go away. It's more like, okay, well, we can do this one thing and it'll reduce a little bit over here. We can do this, like turning little dials and making small improvements. So that's what I'd say. The other, and I guess the other big one is is I guess a market change where something significant happens, changes in the market, and you can say, okay, well now there's a new thing, a new normal, and we want to deal with that. So
That's great. Because even when you talked about storing some money away off of gross revenue, which is great, is there a way for owners of businesses to kind of like help forecast a little bit of their tax liability? I don't know, that's through cash flow forecasting, just to have some idea of maybe some sort of liability at the end of the year, so there's no deer in headlights surprise.
yeah, I mean that's I mean essentially it's a pretty simple activity. Where I think we've talked about this a number of times. Any budget is better than no budget. Essentially, a forecast is combining your budget with the actuals halfway through the year. So you can put the like in a simple model that can be put together, and the end number is the net income, and 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 the simplest way to do it is to just multiply that times the the effective tax rate of the taxpayers, or tax of the business or the owners, and then that would be okay. That's our guess. That's what the
Yeah,
number is. So that could be done every month. It could be done, and it doesn't have to be done like that. Effective tax rate can be you can get that from your accountant or you can calculate it yourself,
yeah,
um, and and then that's just that's like the general number that we're going to shoot for, barring huge changes. You know.
yeah. No, that's great. I think anytime, I know me personally, it's almost like don't like the surprises like that where, if you're prepared, at least you can start planning for it, storing some extra cash of the gross revenue and set it aside so that when that time comes, you are prepared for that bill. But even nowadays with just technology, it's all around us, and you're talking about AI technology, and you look back in the days where people are just number crunching in the calculator, and literally here is my shoebox of receipts, right? I guess, are there any softwares out there, tools that you like people should be using for their small, medium sized businesses to, I guess, stay on top of any sort of tax compliance or anything to help? Um, and there may not, but I'm just kind of curious on that if there's any tools that can help.
I mean, I guess in reality, like there is. I mean, you mentioned AI, and like ChatGPT can do a pretty decent job if you give it enough information
Hmm.
to say this is what it is. Because in the end, like the what's the that's that axiom, garbage in, garbage out. If you give it enough good information, it will produce a pretty good result
Okay.
most of the time. But the trick is knowing what information to give. So that's something that it's free. Anybody can access it. But it's just kind of understanding what needs to be put in there. So um, that's one. The other one is really just building up a forecast or a budget. It can be
Yeah.
done either through Xero, QuickBooks, online, your basic standard online accounting platforms, or through I think there's some other ones that we've used before. Like Fathom is a projection software. Flow is one I know that's pretty good for that too. So a couple of there's different tools out there. Geocon is one we've used before. So they can help just do that projection and then kind of spit out the results for you.
I love it. I think that's the easier. Everyone wants that, right? That's like their magic wand of just push the button. Here's your tax bill. Here's your end of the year, and it's awesome.
Get out your magic wand.
I know. Wish we all had those. And I know we were joking about an actual shoebox of receipts, and I
Mhm.
think those were back in the day. But let's say that a few of those receipts get lost or damaged, and they're not usable. But nowadays, with everything is digital, you can scan it and keep the records. But I mean, in your opinion, is that very important to kind of move to digital record keeping if you're not already? Especially if there is ever an audit or some sort, or just having being compliant throughout the years of just record keeping. Is that something that's in high in your book in terms of importance?
Yeah, there's actually, I guess there's two things. Like growing up in Phoenix, if you left your receipts in the shoebox in the attic in like a year, you would not be able to read them. Like the heat would just melt the ink and it would just be like white paper. So there's definitely, depending on where you live and where you keep your stuff, some advantages to the digital record keeping because receipts don't fade if you take a picture of them when they're new.
Yeah.
The anyway, so I guess there's a couple different ways to look at this. There's one is email is essentially free, and as long as people get their invoices emailed to them,
Yeah.
then as long as you don't delete them, they'll be there and forever.
Yeah.
That's one. That's a. I would say that's the worst option of all the options, but it's the easiest option. You just don't delete them, and they accumulate. Another level above that would be yeah, you download them as some sort of and you organize them into files like old fashioned you know physical files, either on your laptop or on a server or someplace else. And a third one that's even better is that use the digital images of the invoices, either because you received them and they were scanned, you received them via US mail and you scanned them and you got them into this process, or you get them via email or downloaded from a vendor website, and they actually get attached to the transaction in the accounting software. Like there's a number of tools out there the documents that you use to say we're going to pay this bill eventually get attached to the bill or to the transaction in the accounting software. So then, if anyone should ever need to ask what's the nature of this transaction, there's no hunting for it. You don't have to go look in a file folder or go search your email for the last 5 years. It's just right there, and the nature, and it can be a PDF, or it could be an Excel spreadsheet. You can even add notes, just handwritten notes, take a picture. So there's lots of options. So there's lots of options now to just, if you do it kind of like, if you set it up well in the beginning, because you're going to reference the documents regardless to pay the bill
Yeah.
normally. Um, if you just set up well in the beginning, then in the end, it's just super handy and right there. And there's just low lift for either a compliance audit or a financial statement audit.
That's awesome. That's really cool too, and I think it'll make everybody's life easier, both the owner and the tax preparer. That if it's all there, it's clean and it's easy there. And then I guess, like, is there any, I don't say tips, but recommendations or anything that, and maybe it's just that with the tech there, but that can really have a good impact on a business owner to make their tax life easier, I should say.
Yeah, I would say that probably the best one to make the tax life easier is setting up a good bookkeeping system.
Awesome.
That one, because it will help you understand what's going on in your books better on a day-to-day, week-to-week, month-to-month, quarter-to-quarter basis, and it will just at the end of the year, you just say, "Here, Mr. Tax Preparer, are my financials," and instead of having to fight over the shoebox, you can have discussions about, well, let's see what else we can do to save you some money and figure out how to make this work better for you, or do some proactive planning and say, okay, well, what are your long-term goals? So getting the bookkeeping out of the way definitely will make the tax compliance better for everyone.
Yep. That's awesome. It's such a good topic that it's so relevant. I mean, everyone has to deal with taxes in some fashion or other, but a lot of times it gets overlooked, right, till the end of the year. So these, I think, are great tips that could really make everyone's life easy, but be more prepared and more efficient to keep more money in everyone's pocket. So I love it. And I don't know if you have any, other thoughts or parting thoughts for business owners too.
Yeah, I guess I just feel like it's one of those things you can't get away from, and although it may not be the most pleasant thing to deal with on a regular basis, it's definitely important because um, as an individual, usually taxes are the thing you spend the most money on over the course of your life. It's kind of crazy and unbelievable, but usually that's the case. So it's an important thing to pay attention to.
That's
Anyway,
great.
thanks again, Jeff. This was good, and I don't know if I like being in the hot seat asking the questions, but but it was a good turn of the tables here. So
I
anyway,
loved it.
that's all I got. I think we're good for today. All right.
That's great. Well, thank you. Thanks, Chad.
Yeah, well, good stuff, and we'll see you next time. Take care.
Thanks, guys.